22 minutes. Okay. Welcome. Thanks for joining. My name is Julianne Booker. I'm the Vice President of Strategy and Operations here at Revesco Properties Trust. Today I'm joined by founders and managing partners Scott Lee and Chris Wood to tell you about the fund and why now's a great time to invest. So welcome. Chris, just give us a quick overview of what RPT does and where.
We buy open-air retail centers across the United States. We're a US dollar denominated fund, and we buy in growing and expanding trade areas close to our head office in Denver, Colorado.
That's great. And Scott, tell us about open-air retail. What's open-air retail?
Sure. Open-air retail is quite simply not the enclosed mall world. That's essentially what it is. We avoid enclosed malls primarily because it's just very expensive for us. Once you have to heat it, put a roof on it, heat it, clean it, it just gets too expensive. We focus on open air shopping centers. So think of your grocery anchored shopping center where you buy your groceries, go to the pharmacy, go to the bank. Those are the types of things we typically focus on.
That's great. So last couple of years, tell us about what's been going on in the fund, Chris.
Well, we started from nothing at zero. The metrics of the fund are up here on the screen. Rough metrics, about 100 million of assets under management, about 430,000 square feet of space. Scott and I both have a very strong retail leasing background, so that's why you see the occupancy at 99%. And for those that aren't familiar, WALT is an industry term we use for weighted average lease term. It tells you as an investor how long the average contract is for tenants to pay us rent. So we're pretty proud that that number is as big as it is.
Yeah, that's fantastic. So these are the targeted returns for the fund. We're distributing 6% a year. We distribute that annually, and we're targeting 12 to 15% annualized returns. How do we get to those returns, Scott? Tell us about the value add strategy.
Sure. Basically, we kind of get there in kind of three different ways. As Chris mentioned, we are very active managers, so we're continually leasing up vacant space wherever we can. That's kind of one of our core specialties. The other way we do it is by restructuring a lot of anchor leases, which allows us to provide more term and security for RPT and its investors. And finally, we typically add retail density wherever we can on a shopping center. Say, for example, there's some excess space in the parking lot. We'll oftentimes add retail space where we can to improve the net operating income of the center.
That's great. So this is the Revesco track record. The Revesco Properties Trust has been around for 2 years, but Chris, how about you speak to these numbers?
Yeah, as much as the fund is relatively new, we've had Revesco for a dozen years. As we mentioned earlier, Scott and I had been in this space along with our partners for over 30 years apiece. But in that 12 years, we've done 600 million of transaction. That represents 19 dispositions. So where we bought a property, implemented the plan to increase value, and disposed of that asset. Our average return is over 20%, as you can see, and we typically take 4 to 5 years. These are longer term assets that just take a fair amount of time and effort to add value and then sell. So that's the track record, and we're quite happy with those numbers.
Yeah, very, very strong. So Scott, tell us a little bit more about the strategy when we're buying an asset. What exactly are we looking for here?
Well, as you can see, we do not acquire enclosed malls. And I mentioned earlier, because of the cost involved in doing so, we will typically focus on high growth, high income areas. Quite simply, it's just good for retail. The other aspect that we look at is the overall cost of the shopping center. If we can find shopping centers that are below replacement cost, it makes it extremely difficult for anybody to perhaps try to wrestle away one of our anchor tenants across the street. We're always thinking about that perspective. And quite simply, we're looking for shopping centers that have below market lease rates. It allows us to increase value and drive better returns for our investors. And of course, we're always looking to increase density where we can. Again, it just allows us to improve the net operating income for the asset.
That's great. So tell us, Chris, why is now a good time for open air retail?
Well, open air retail has often been overlooked. Obviously, we're quite proud of our team. We're based in Denver, have a satellite office here in Vancouver, but we've got over 20 people that do this day in, day out. And it's real estate. These are physical assets. Every investor gets its distribution as a return of capital, which is quite efficient from a tax perspective. And, you know, there is a need for a retailer today to have both an online presence and a bricks and mortar presence. The consumer just demands it, right? So when we put all these things together, we think now is a great opportune time to invest, because retail has largely been overlooked in the last 10 years. People have been chasing other commercial real estate sectors, and retail is now an opportunity to buy at very attractive pricing, low replacement cost, and make some very significant returns.
And Scott, as the sponsor, what makes you so qualified to be an expert in this space?
Hey, great question. For Chris and I, we've been in the commercial real estate field for over 35 years, working with the best in class retailers right across North America. So as a consequence, we have relationships with a lot of the key anchor tenants that most investors would want to have as their tenants.
That's fantastic. So just going back to these investment highlights, the last piece I want to touch on is the 10% sponsor co-invest. So Chris, tell us about what that means.
Well, the reason we came up with RPT was to be able to put investor funds beside ours. And we think that creates alignment between the investor and us as a sponsorship. This is a wealth creation vehicle. These are long-term assets that need to be aligned with long-term capital. And I think every investor wants to know that we've got real skin in the game. So that's absolutely for us part of the reason we started with this. And I think it's important to share with potential investors.
That's great. So just to wrap up here, RPT invests in needs-based open-air retail in high-growth markets in the U.S. We're distributing 6% a year. That's distributed quarterly. You can invest through using cash and any of your registered funds, RRSPs, RESPs, etc. There is no U.S. tax filing, but you still have exposure to the U.S. market and U.S. dollar, and you get a great team of really well-qualified sponsors. Thanks so much for your time today.
Thanks, Julianne.